In today's video, I'm going to show you every single stock that pays a monthly dividend. I'm going to show you their dividend yield, some of their dividend safety scores. If you guys are interested, stay tuned until the end to see every single one. Welcome back to the channel, everybody. My name is Bruce Wang. For anybody that's brand new, we are doing another dividend investing video going over all the monthly dividend stocks that I know and a bunch that I don't know as well. But I will show you every single one. So let's jump into the portfolio and show you guys where my progress is at today. So my portfolio value is sitting at $93,261 and my annual dividend income is sitting at $2,973. My dividend progress has slowed down over the last month, and I'll go over some of the new strategies that I've implemented. But let's jump right into the monthly dividend stocks right now. And if you guys are interested in anything in this video, links are going to be in the description. If you need some free stocks and you haven't signed up for any of the brokerages yet, like Robinhood, Webull, M1 Finance, everything is going to be there. If you want to see my entire portfolio, my 93,000 portfolio, links are all down in the description. So let's jump right into it. So this is an ideas list of monthly dividend stock payers. Some of you guys are interested in owning some stocks that do pay monthly dividends, and I have to tell you that it is true. These all do pay monthly dividends. If you guys want some more proof, let me show you right here. So in my portfolio, I do have a few that is paying me monthly dividends. Let's take some here. SPHD is paying me about $30 a month. Realty Income here is paying me $23 a month. PSEC is paying me about $18, and so forth and so on. See, these are every single month that is paying me. AGNC is another one. BND is a ETF that's paying me about $6 here and $5 here. These are two different portfolios. So yes, it is true that there are stocks and ETFs that pay you monthly in dividends. So now you guys are probably wondering, what are the safest and what are the highest dividend yielding monthly paying dividend stocks? Because you guys want to get in really quickly and you guys just want to make some money. All right. So I'm going to do this by dividend safety score, because when it comes to me and my portfolio, I like to stick with more a conservative approach when it comes to my dividends. And the first one here is I've done a video on this before. Pembina Pipeline. This is in the energy sector, and currently it is potentially undervalued. 7% dividend yield with a dividend safety score of 80. 80 is pretty good. And dividend growth over the last 5 years, or over the last year, is 5% on average. When it comes to Pembina Pipeline, I've looked into it and I didn't really want to invest in it just because I don't understand the business model. It's really complicated compared to everything else that I own. I try to stick with more simpler, is that even a word? More simple businesses that, it's easy for me to comprehend, such as Realty Income. This one is a big one for me. This is the one that I'm basically all in on Realty Income at the moment. It's in the real estate sector. Looks reasonably valued right now. I was doing a lot of buying when it comes to Realty Income probably 2 to 3 months ago. Anybody that has been watching since March, you guys know how much I like Realty Income. Dividend yield right now is sitting at 4.66% with a dividend safety score of 70. This is pretty good, safe. But over the last year, only a 3% growth. So let's jump into the research here. That's one reason why I really like Simply Safe Dividends. You guys can get a 2-week free trial, links in the description. So really quickly, don't forget to drop me a like if you guys are finding a lot of value in this video. But I want to interrupt you really quickly 1 second. When it comes to Simply Safe Dividends, they do come out with a 2-week free trial. And when I first started using them, I was doing that free trial for like 2 to 3 months. So I think I made like 4 different accounts. And I just bit the bullet and I paid the $400 annual fee to have Simply Safe Dividends. I know a lot of you guys out there are just starting investing and you're not really making that much money from your investments. I'm not making that much money from my investments either. But when it comes to the free trial, just do it. The free trial is great. If you do have the money to shill out for the $400 annual fee, then go for it. But it is not that necessary. I think that you can find enough value with the 2-week free trial that you don't even need to sign up for Simply Safe Dividends annually. All right, so let's jump into Realty Income, and I'll show you guys why I like this stock so much. So firstly, it's in the real estate sector. I understand real estate. That's my thing. You know, you buy a property, you fix it up, you rent it out, you collect the rent, pay all the expenses, and everything left over, that's your money to keep. So when it comes to the monthly dividends, you know, in America, a lot of these REITs, they have to pay out about 90% of their profits. So that's why a lot of REITs are the monthly paying dividend stocks. Another reason why I like Realty Income is because they are a big market cap stock, a large cap stock, 21.2 billion. I do own a few companies that are worth like 1 or 2 billion, but I try to keep that. I try not to own too much of that stock when it comes to that. I like larger cap stocks just because they're a lot safer to own. So if you look at my entire portfolio here, you can see like I own 10% of Realty Income in my entire portfolio. So I'm not just talking the talk, right? I'm walking the walk as well. Annual income from this is $437, and I've only started investing for about 2 years. So if I continue on this grind, I can only imagine where I'll be in another, 10 years, let's say, from now. So here is another important factor that you guys should look at whenever you're looking at dividend paying companies, all right? You want to see their dividend growth streak, and on top of that, their uninterrupted dividend streaks. So when it comes to Realty Income, there's been 25 years of consecutive increases. So that means they're doing well over the last 25 years. They've been able to increase their dividends by, probably a few cents every single year. I know over the last 2 years that I've owned them, they've only raised it maybe once or twice that I can remember, and it's only been by a few pennies, but still, it's still growing. Uninterrupted dividend streak basically means that it's never cut their dividends. It's always been able to pay it out. They've never paused it. They've never stopped it. And with that, I think this is in the Dividend Aristocrats, which is another video all to itself. I think I made one last year, but I definitely do need to make an update on that video. So those are some of the metrics that I look at before I decide if I really do want to invest into any of these companies. Moving on here, we have Main Street Capital. This one I used to own up until the pandemic hit back in March. So I think I owned a few $1,000s worth of this stock back in the day. It's in the financial sector, may be undervalued at the moment. Main's dividend yield is 25% above its 5-year average. Dividend yield 7.82%. That is a large dividend yield for this company. Dividend safety score is 62. 62 is all right. It's not too bad. Not as good as 70 and not as good as 80. Last 5% over the last year when it comes to their dividend growth. So the main reason why I got rid of Main Street Capital is because in my M1 Finance portfolio, there's a lot of different other companies that I wanted to invest in, such as Tesla, Amazon, and Apple. So basically what I did was I sold off $1,000 or so worth of Main Street Capital and just redistributed back into my portfolio into other undervalued stocks. And this came at probably one of the worst times possible, around March 20th. I believe that's when I did most of my rebalancing of my portfolio. And I think if we jump into my M1 Finance portfolio really quickly, this is almost worth $30,000, $2,500 worth of gains here. And if we take a look into my holdings, I was buying Tesla, I was buying into all of these other companies, 31 positions. So I don't regret not selling it because I was buying really high quality companies after I sold it. All right, so moving down here to the fourth monthly paying dividend stock, we have LTC Properties. This one is also in the real estate sector. And I think LTC stands for long-term care. And I did have some insider information on this one. I have a friend that's a pharmacist, and he was saying the long-term care business is not doing so well. So it made me look into it a lot further. And during the Rona situation where, nursing homes was getting hit pretty hard. And basically when it comes to the Rona and a nursing home, those two things just don't mix, right? Those are really, everybody in a nursing home is most likely going to be a high risk individual. And, when I kind of put 1, 2, and 2 together, I just sold it all and I Same thing with the Main Street Capital. I sold it and I put that back into my M1 Finance portfolio, where a lot of these other companies are doing a lot better. And let's move on. We got Stag Industrial. This one is also in the real estate sector, and another one that I used to own. This one could be overvalued. Dividend yield sitting at 4.46%, 45 when it comes to dividend safety score, 1% growth over the last year. So this company, this REIT, it's very similar to Realty Income. And again, I did a really big rebalancing over March, and I sold this one as well. I sold Stag Industries, and basically I took all that capital and I bought Realty Income. But if you guys come back, you know, this is still a quality company. I think it's based out of Boston, which is where I'm from. Just take a look at it if you guys are still interested in, you know, wanting to diversify away from whatever stocks that you own right now. Moving on, we have Ener Plus Corporation. This is in the energy sector, may be undervalued, just under 3% dividend yield, 45% when it comes to this dividend safety score. Very slow growth over the last year. Moving on, Inter Pipeline Ltd, energy sector again. I think this company is very similar to Pembina. Could be overvalued, 3.34% dividend yield, 44 borderline safety score, 1% growth over the last year. So, you know, these companies, they're not as high quality as the ones in the beginning, but you know, they are still there. If we take a look at Gain, Gladstone Investment Company, this is financial, looks reasonably valued, 8.73% dividend yield. This is a really high dividend yield, but it is a 41 score, borderline 1% when it comes to the dividend growth. So when it comes to companies that have a dividend safety score of 50 and under, they have a higher chance of having a dividend cut, their dividend paused, or their dividend like stopped. And that's why I tend to try to stay away from those companies. But if I already do own them, then, you know, I'm gonna try to stick through the rough times with them. But if I don't own them already and they already have a borderline score, then I tend not to touch them. All right, so that's just my 2 cents. So those companies that I just went over, those are some of the safer monthly paying dividend stocks on the stock market right now. But where I'm going to take you now is into the world of speculation. There's a lot of other companies that also pay monthly dividends, and here they are. These are all the ones that I know of. This is provided for me from Simply Safe Dividends as well. You know, so the top 8 we've already kind of went over a little bit, and everything else here, just take a look at their dividend safety score, you know, 39 and below all the way until 6. So these companies, I think I own some of AG&C, and I own some of Prospect Capital, and I own a very small percentage of them. I own probably like $1,000 worth of each company. All right, so I do like to go into risky investments every now and then, but I do keep those investments at a very manageable level for me. And that's something that I think that you guys should also take into consideration. If you guys are gonna invest in something with really high dividends, like 14% here, RioCan Real Estate Investment Trust, I have no idea, I've never heard of this company before. Or let's see, Oxford Square Capital Corp, 15.56%. If you're gonna do anything with these companies, make sure you know the business and make sure you know your risk tolerance. I don't want you guys to go throw your life savings into these companies and then they cut their dividends or they go bankrupt or whatever the reason, and you guys come back to blame me for it, because I'm not a financial advisor, and that's just not gonna be a really good look. All right, so I'm gonna give you guys some more pro tips here. If you guys saw this entire list of monthly paying dividend stocks and you guys are just like, you know, those companies don't interest me, I don't find anything interesting about them, and they don't look like they're going to be profitable later on, I agree with you. Most of those companies on that list are really bad. So my main tip here is you don't have to own a monthly dividend stock to get paid dividends monthly. All right, let me repeat that. You don't have to own a monthly dividend stock to get paid dividends monthly. All right, so let me take you back into my annual dividends income here, and I'll show you an example. Let's organize this by August. All right, so in August, AT&T paid me $52 in dividends. All right. In November, they're going to pay me $52 again. In February, they're going to pay me $52. In May, they're going to pay me $52. So that's just one company that's paying me quarterly dividends every 3 months. If we mix that in with another company that's paying me quarterly dividends, but on September, December, March, and June, we can easily find that here. ExxonMobil is going to be paying me $96 in September, December, March, and June. And you know what's going to happen next. We're going to go into October. So let's look at Altria here. I own 20 shares. They're going to be paying me $17 in October, $17 in January, April, and July. So basically what I'm trying to show you is that if you own 3 quarterly dividend paying companies with a different monthly schedule, with a different quarterly schedule, then you can collect dividends every single month. It's going to be exactly the same as having one company that's going to be paying you dividends every single month. But you own 3 quality dividend stocks. You can choose any one and just check out their dividend schedule and just mix it up a little bit, and you guys can get paid every single month just from that as well. So if you guys want to see that entire list of monthly paying dividend stocks, links are going to be in the description. On top of that, if you guys want to see more videos from me, go check out these videos here. Don't forget to like, subscribe, hit that notification, follow me on Instagram, follow me on my second channel, and I'll see you guys in the next video. Thanks for watching. Bye.